Today, we take a closer look at the economy. Recent price index shows inflation has somewhat stabilized here in Korea, but the economic performance in the first half was rather weak. Will the country see a rebound in the latter half? For more, our economic correspondent Shin Ha-young joins me in the studio. Welcome, Ha-young.
Great to be back, Jung-min.
So, can we expect South Korea to see a rebound in the second half?
Well, Seoul's finance ministry has slashed its growth projection for this year to 1.4%, citing a sluggish performance in the first 6 months. And looking back at the first half, exports, which are crucial to South Korea's economy, continue to decline. And data from the Trade Ministry shows that the value of exports fell 6% from the year before in June. And that's the 9th consecutive month that monthly exports have seen an on-year drop. And this was mainly due to delayed recovery in the chip industry, which produces the nation's key export item. And in fact, chip export last month fell 28% compared to the previous year. And other factors include a fall in exports to China amid a rather weak reopening from China. But on the bright side, the on-year decline in overall exports in June was the smallest so far this year, indicating that the country's exports may rebound in the latter half. Also, the country saw a trade surplus in June for the first time in 16 months. Considering such notable economic indicators, South Korea's finance minister expects the country to see a distinct recovery as it approaches the end of the year, particularly due to a recovery in the IT industry. And one expert I spoke to was optimistic about a rebound in the semiconductor industry. Let's take a listen.
The chip industry recovers faster than other industries. This is because it has a certain period where its supply decreases while demand itself rises slowly, indicating a recovery. Currently, the chip supply continues to decrease and the economy is gradually recovering, which means it's clear that the second half is a period where the demand to supply ratio improves.
And Ha-young, what are the prospects for inflation from July to December? It has continued to slow in recent months.
You're right, Jung-min. South Korea's consumer prices, a key gauge of inflation, have slowed for the first 6 months. And in fact, last month, it rose by 2.7% compared to the previous year. And this is the first time that on-year hikes fell to the 2% range in 21 months. And Seoul became one of only 3 countries in the G20 group of countries that recorded consumer price hikes in the 2% range. And based on that trend, the government has lowered its inflation outlook for the year from 3.5% to 3.3%. But there are still lingering factors that could raise prices, such as geopolitical risks and accumulated pressures for price hikes, including for public utility fees.
Consumer prices have cooled down to the 2% range, indicating price stability. One of the main factors for this is weakened oil prices. So when oil prices rise again, inflation may climb again.
Meanwhile, the Bank of Korea has frozen its key interest rate for the 3rd time in a row thanks to a slowdown in inflation. But considering the currency market, we will still have to keep an eye on the BOK's policy rate in the second half, including this month, as central banks in Europe have raised their key rates, while more rate hikes are likely in the U.S. following a recent pause.
And what were the major takeaways from what the finance ministry unveiled this week for its economic policy direction for the second half?
Well, in response, the government unveiled 4 economic policy directions on Tuesday, and mainly focusing on economic rebound and people's livelihood. First, let's take a listen to what an official had to say.
In the second half of this year, the government will focus on enhancing economic vitality, stabilizing people's livelihoods, improving the economic structure, and preparing for the future.
First, it will boost sluggish exports by injecting a record-breaking 184 trillion Korean won, or roughly $140 billion into trade financing during the second half of the year. And it also aims to stimulate domestic consumption by boosting tourism. And it'll do so by distributing 300,000 vouchers worth $23 each to be used for accommodation during off-season travel. And also, free round-trip flight tickets will be given out, targeting visitors from countries countries such as Japan, Taiwan, and China. And to stabilize prices, it plans to minimize increase in public utility fees such as gas bills. And in order to ease the cost burden on vulnerable groups, the government will expand its so-called energy cashback plan. Households can apply to get a certain amount of money back on their bills if they use less gas than they did last year.
Our economics correspondent Shin Ha-young, thank you.
Thank you.